Good morning traders, welcome to another RMD weekly market overview. We saw quite a bit of action last week and especially on Friday with many markets either correcting or selling off aggressively. This week we will look at where we can expect to go from here as well as what trading opportunities might be waiting for us. I'm going to let the disclaimer roll and I will see you in the charts. We are looking at the US dollar to South African rand. Last week, the yearly R2 pivot at 1655 has proven itself to be strong support, and that was then followed by a brief retest of the initial breakout area from this diagonal at 1695. So this was in line with what we expected and also mentioned in our market overview last week. Then afterwards, price sold off again to only find some support on Friday afternoon at the yearly R2 pivot again at 1655. So for this week, we can expect any bullish price action above this level to probably take us back towards this overhead diagonal between the area of 1675 and 1680. And if we can, of course, break above this level, then we can expect price to move higher and hopefully back towards the monthly pivot at 17 to 1708. However, if we were to break lower and back into this area of support below us, and there's actually multiple levels of support right below us, that includes the 200 daily moving average at 16 Rand 49, or let's just say 16 Rand 50, and also this diagonal support line near the same level at 1645. And then just below that, we do have the monthly S1 pivot also at 16 Rand 40. There is another area of support below that as well, and that would be at 1585, and that would be the monthly S2 pivot. But let's see what price does and keep an eye out on the 1655 level. Looking now at the Euro USD, price last week made a new high, just shy of the overhead diagonal resistance, and also just shy of our second bullish target. Afterwards, price sold off and also found some additional support at the lower boundary of this bullish channel at 1.180. And of course, at this stage, we can see that there was also some additional support provided by the 200 SMA here on the 4-hour, with this little lower shadow finding some support right off that level. So a very important level to watch for this week would of course be our 200 SMA here, as if we can stay above it as well as above this lower boundary of our bullish channel, we can hopefully see price firstly move back towards our 100 SMA on the 4-hour, also meeting up with the monthly and weekly pivots at 1.187. And if, of course, we can get above this level or get a close above this level, it's very likely that we will see price move higher towards the weekly R1 pivot at 1.197 and also close to where our previous highs were from last week. However, if we were to reject off of this level and lose the support of this lower boundary at 1.180 or between 1.180 and 1.11, it's likely that we will see price move lower towards support at 1.170, and hopefully this is as far as we will go down. However, there is some additional support at the bottom around 1.16 and also the yearly R1 at 1.157. Just a brief look at the economic calendar for the week. Not a lot of high impact events other than a few affecting the euro that we have on Thursday, and then just some medium impact events on Friday as well, some CPI figures. So just keep an eye out, but I think the worst is now behind us with the non-farm payrolls on Friday on just after 2 at 2:30. I think that was the major one to look out for the month. But still worth keeping an eye out on these events as they will affect volatility. Looking at the GBPUSD, we saw the correction that we mentioned in our market overview video last week, and then as expected, we saw price head back towards our monthly pivot at 1.325, and we even saw price just briefly rejecting off of this 4-hour 100 SMA, and currently we are just above our monthly pivot. However, it's likely that we might even see a small correction towards the weekly pivot at 1.331. Any price action between this area in between 1.325 and 1.331 would be crucial to watch for price action, as a close below our monthly pivot will likely take us towards our monthly S1 pivot at 1.309, and this is also a very important major support, and also we will likely meet up with the 4-hour 200 SMA, and then any bullish price action above this area can likely see us move higher towards the weekly R1 at 1.345. And moving on to the Australian dollar USD. Also, as we expected, we saw price correcting towards the support level at 0.728, which was our weekly pivot from last week and also our monthly pivot. And then, of course, we also saw this 4-hour candle and this lower shadow rejecting off of the 4-hour 100 SMA, and we are currently right on our monthly pivot level. And just worth pointing out is that in the scenario where we are looking at price continuation, we have now retested this 61.8 Fibonacci level, meaning if we were able to get back above our monthly pivot or see some bullish price action above our monthly pivot, it's likely that we can see price move back higher towards our weekly R1 pivot at 0.739. However, if we were to reject from this area of our monthly pivot, it's possible that we will see price move lower, back firstly towards the 4-hour 100 SMA, and if we lose that, it's possible that, and very likely actually, in fact, that we will test our 4-hour 200 SMA, also an area of a previous area of resistance, meaning a new area of support, and also coinciding with this higher time frame diagonal at 0.72. And now moving on to the US 100, also known as the NASDAQ. This is our second week of covering the NASDAQ. And in line with our market overview last week, we said that if we see some more bullish price action, it's likely that we will see price move up to the yearly R3 pivot again at 12,380, which of course it did, and after which it very quickly sold off towards support at 11,700 and then to 11,625, also in line with our analysis. This level of support was a bit more difficult to break. So you can see we had our larger diagonal as well as this 4-hour 100 SMA offering some initial support. However, that was quickly overcome with another bearish candle closing below it, and then price making low. We did close above it with the 200 SMA on the 4-hour offering sufficient support to keep price above this area. At this stage, it's likely, though, considering the bearish momentum that we have, and also looking at this rejection of this upper shadow from the monthly pivot, and also the 100 SMA on the 4-hour, that we will again move lower towards this area to retest this area at 11,250. But any bullish price action from this area and any price action above our weekly and monthly pivot at 11,700 will very likely take us back towards this area of the weekly R1 at 12,295, and also our previous highs at around 12,300, where the yearly R3 pivot is at. So just keep an eye out in this area about the 4-hour 100 SMA, as this would be crucial for any price continuation higher. Looking at Brent crude oil stocks saw a large sell-off last week, with price breaking through the diagonal support and as also the 4-hour 200 SMA. We did see a brief retest towards the previous area of support, which was at 44.73, and that followed another large sell-off with strong bullish momentum, currently probably taking us towards this 42 level, which is where we will find our yearly S2 pivot. Immediate area of resistance, and also the new area of resistance going forward, would be the $43 level which is the previous area of support as well. And then, of course, then should we see price move into this area, expect any price action towards this 43 area to be rejected at this stage. It is also likely that over the coming weeks, depending on how aggressive oil stocks continue to sell off or, on the other hand, recover, it's likely that we will see a 41.40, which is the monthly S2, and then, of course, strong horizontal support at $43.90. So these would be our areas of support as price moves lower. However, any bullish continuation or any bullish price action will need to happen above 43, and that could then likely take us back to $44.75. And we are now looking at gold. Gold is starting to trade on dangerous territory with the area between 1910 and 1920. The crucial last line and last level of support for gold. As we can see, we have this major diagonal support area as well on this level. So at this stage, I believe consolidation between the area of 1920 and 1950 is a very distinct possibility, with any close and any bullish price action above the 1950 level, possibly taking us higher towards 1978 to 1980. And of course, in a very scenario where we would see price move into this high risk area below 1920 and above 1910. So any close or any bearish price action below this will take us towards, or probably see a sell off towards this monthly S1 pivot at 1,860. And that will also coincide with this target, which is projected lower. So yeah, just keep an eye out for that high risk area. We are once again concluding with Bitcoin. Cryptocurrencies and Bitcoin seeing also a large sell-off. And what we've noticed is that we've had this head and shoulders, very ominous head and shoulders forming from the beginning of August all the way to around Friday. And if we were to project that target down, and I'll just quickly show you. So you can see here we have our first or our left shoulder, we have this head, and then we had this right shoulder. And just projecting that down from where it broke lower, we can see that our head and shoulder target actually played out towards this 9,800 level. So I just wanted to point that out. But just looking on a more micro level, we can see that we had this breach of this initial diagonal support of that very strong bearish candle. We then breached the 11,500 level, and then from there just got progressively worse, with the next level falling being the 11,180 level, and then that very quickly opened up the 10,600 area of support, which is the monthly pivot level. And then after that, we saw price move as low as 10,000. So just looking at where we might go from here, it's worth noting that we are on a strong area of support. So this 10,000 area is, of course, a major psychological area of support. And we can already see that there have been some buyers stepping in on this level. And if we do move to a higher time frame, in the daily time frame, we can see that we are now also very close to our daily 100 SMA. So it would be very important at this stage to get back above the daily 100 SMA if we want to see price move back higher towards 10,600. And of course, if we want to see anything above 10,600 again, we need to obviously close above it. And that will then take us back towards 11,250, followed by 11,500. Just keep in mind that it's also possible that at this stage, should we see continued bearish price action and a continued sell-off, it's likely that we will retest or see the full head and shoulders target play out, which is closer to 9,800. And then perhaps even the lower end of 9,000, where we have some additional major horizontal support. And then, of course, it's also worth noting that we do have our yearly pivot all the way down at 8,000, which is over here. I trust you enjoyed this week's video. I would like to remind all our viewers again to please subscribe and also to select the notification button in order to be reminded as soon as we make new content live. And also, if you're interested in trading or just want to learn more about trading, please visit our website www.rmdtrader.com, where you can quickly and easily open an account and get free access to our MetaTrader 5 trading platform and all our educational resources. Until next time, this is John Jacobs for RMD Trader. Trade smart and trade successful.